Congratulations! Your loan is conditionally approved. A SunWest loan originator is always on top of her approvals, no matter where she is. Break free with Morgan.
Welcome to The Interest. I'm Christine Stewart. We all saw it coming. The head of the CFPB warned of the crackdown on non-banks at the end of March, and last week it laid out a plan for more oversight of non-banks and other financial institutions. The Financial Stability and Oversight Council say the plan comes in response to the collapse of two banks in March and the volatility that followed. CFPB Director Rohit Chopra says one of the biggest problems we face when confronting the dangers in our financial system is regulatory amnesia. The plan would give regulators more oversight of companies that are struggling and in danger of failing. The council also, for the first time, spelled out how they would assess and handle potential risks. The guidelines include looking at the company's size, scale, and concentration, as well as how a collapse might impact other non-banks. The council says non-banks could be referred to the Federal Reserve for supervision. If adopted, this plan would reverse guidance issued under the Trump administration that made it harder to have this kind of oversight over non-banks. The public has 60 days to comment on the proposals. Meanwhile, the MBA is pushing back as the federal government argues lenders can be held responsible for biased appraisals. The MBA filed an amicus brief in federal court Friday, disputing arguments the Justice Department and the CFPB made last month. This all stems from a lawsuit filed last August by a Maryland couple claiming they are victims of appraisal bias. The couple, who are Black, applied for refinancing in 2021 when an appraiser valued the home at $472,000. Loan Depot denied the refi application, saying the appraisal had to be at least $550,000. They applied for a refi with a different lender, and the appraisal came in at $750,000. In a filing last month, and based on an interpretation from the CFPB, the Justice Department says lenders can be held liable if they should have known an appraisal is biased. The DOJ says homeowners can sue lenders without having to prove an FHA violation has occurred. But the MBA says lenders intentionally have little impact on appraisals. They also say the CFPB's interpretation is not one that's been applied before. They say the CFPB should use its own rulemaking process to make this change, not the courts. Loan Depot has asked a judge to dismiss the charges against the company. Coming up, an expert tells us what we can expect from AI in the future.
Tired of turndowns and wasting 25 basis points or more on slow and manual loan processing? Divorce your processor and break free with Morgan Chat AI. There are no bad deals or tough loans, only deserving families that need AI-driven fast and accurate service. We treat every client fairly and with empathy. AI that understands how you feel.
I am Morgan. I get you.
Welcome back. AI is all the buzz at the moment, but what can it do for the mortgage industry? Our own Mike Savino takes a peek.
For this particular race, we have not been left behind.
Everyone is racing to see what else we can do with artificial intelligence. ServiceLink's Sandeepa Sashamohan says the mortgage industry is no different, and we can find some real big names looking to help us find solutions to our problems.
And now very big industry leaders like Microsoft, who is like backed ChatGPT, Amazon's entered into the market as well as Bing.
AI platforms like ChatGPT can do a lot of things, but unless you build one yourself, it's hard to train it to write a mortgage. AI platforms use data to learn what to do, but laws and regulations limit your ability to share anything that can identify a customer.
We have to be very controlled in the way we expose that kind of large data to an AI model, right?
But we can train AI tools to help us with certain tasks. For example, it can help us use trends to set borrower expectations. Will their application take longer? And AI tools can help improve transparency.
Where AI will be really handy is telling you as you work through your process, hey, I know where your loan information is, like where your loan status is.
Artificial intelligence still can't make judgment calls as well as people, and human minds will always be needed to help the industry evolve. Plus, robots will never give your borrowers the relationships they're looking for.
The soft skills that humans bring that computers just can't mimic.
You can hear more from Sashi Mohan on Where Tech is Going on The Principal, NMP's news podcast, available wherever you get your podcasts. Reporting for The Interest, I'm Mike Savino.
Thanks, Mike. In other news, a Connecticut judge ruled that regulators can revoke First Alliance's license and impose a $750,000 penalty. Back in 2021, Connecticut's banking commissioner found that First Alliance was encouraging lesser-trained employees to act as loan originators without a license. Other violations include failing to properly notify customers about decisions to deny credit or give loans in amounts that were smaller than requested. Connecticut's banking department says the conduct violated several laws, including the Fair Credit Reporting Act and the Truth in Lending Act. First Alliance appealed the decision, saying that the banking department exceeded its authority with its ruling, but the judge disagreed. The CFPB's lawsuit against the company is still making its way through federal court. Coming up, shifts in the housing market leave investors holding the bag.
Network with more than 2,000 attendees in Irvine for the California Mortgage Expo, May 3rd and 4th. From San Diego to LA to San Francisco, no one does it like we do. Sign up now at camortgageexpo.com.
Welcome back. Here's what else is interesting today. It's no surprise that investors aren't seeing the same profits they were a year ago. But 1 in 7 are actually losing money when flipping homes, the highest share since 2016. With homeowners still unsure about the market, home price growth has leveled off. Meanwhile, Redfin says higher mortgage rates are eating into those smaller profits for some. It's made flipping a losing proposition. But rent prices are also coming down, so investors who decide to rent instead of sell are also seeing diminishing returns. For more on these and all of today's top stories, go to nationalmortgageprofessional.com.